everyone. I'm really excited to be here and to share really exciting benefits. I am the Relationship Manager for Workplace Banking Program, which is an exclusive program that we offer to Unity Healthcare employees. Through this program, we're able to offer you guys exclusive perks, exclusive benefits that we normally don't offer to anyone else in our branches or online. So it's something that we've designed for you guys, and there's anything that you can think of in terms of banking is included in that program. So from you guys receiving loan discounts, better rates on CDs, whether if you needed a financial planner or needed to do some estate planning, anything that you may need in terms of banking is included in this program for you guys. I'm going to just give you guys a quick gist of the benefits that you do receive from us. So like I mentioned, we do offer you guys loan discounts. So any type of personal loan or lines of credit that you apply through PNC, you do get a 0.25% discount, and you don't pay closing costs. Now, that's only on your loans and lines of credits. That doesn't apply to mortgage. But any type of loan, like if you ever needed to go in and get a car loan or a home equity loan or line of credit, you're not paying closing costs. That's thousands of dollars that you're saving from PNC. We do give you guys better rates on CDs and savings accounts. So if you ever walk into a PNC branch and say, hey, I wanted to set up a 6-month CD, we would give you a little bit better rate than what everyone else receives when they walk into our branches. We start you off by offering a completely free account that has no minimums, no monthly fees, no service fees. So absolutely free account. And the way the account is set up for you guys is that it comes with a checking account, comes with a savings account, and an overdraft protection. So you get everything in one shot. On the savings, you do earn 0.31%, which is a fairly high interest rate in today's market on a free savings account. So take advantage of that. The account, has great benefits, and I can talk about the account forever, but I won't go too much into it. But it has great features. It's real time, so the minute you swipe your card, you go online, you know exactly how much money you have in your account. It has features like where you can create budgets for yourself. And I use the budgeting feature a lot because I love coffee, and believe it or not, I go to Starbucks 3 times a day. So it literally helps me stay on track because I have a budget set that anytime I go over $25 in spending at Starbucks, it sends me an alert and lets me know that, Tuba, you have had too much coffee or you're spending too much money. So it's really like a fun account, and you can customize it to your needs. It's amazing. There's a lot of fun things that you can do with the virtual wallet. The coolest feature, or one of my favorite features or benefits in the program, is that you know how you guys go use an ATM machine, and if it's not your bank, you guys get charged a fee? Your bank will charge you a fee. So with PNC, we actually give you twice a month. You can use any bank's ATM machine anywhere in the world, and we don't charge you for it. Now that machine will still charge you, you have to accept that fee. Otherwise, the machine won't give you your funds, right? So we can't control other banks' fees, but on our part, we won't charge you twice a month, and that's anywhere in the world. So that's a really fun feature that we have. One more benefit that I want to share with you guys. So is there anyone that's already with PNC over here? Oh, great. So I have a really cool thing for you. So if you're already with PNC and you refer your coworkers, you get $100 per person for referring them as a thank you from PNC. You can refer up to 10 people each calendar year. That's $1,000 from PNC for you. So great, so that's one of the features. And lastly, I will tie it in towards mortgage. We also have a benefit with mortgage for you guys. So if you ever apply for a mortgage through PNC Bank, whether it's refinancing or a new mortgage or a vacation property, any type of mortgage that you do with PNC, we have a $300 cash incentive built into it. So you can get $300 from PNC anytime you do a mortgage through us. It's a gift from us to you, just as a thank you. And today, if let's say any of you guys decided that you want to give PNC a try and you want to take a look at that account, if you decided to sign up, we are doing a $200 cash incentive offer. There are 2 requirements to get the $200. One requirement is to make sure that you have direct deposit in your account. It does not have to be your full paycheck, so you can split your deposit. Just make sure it adds up to $1,000 for the whole month. So you could do $500 per paycheck, or you can do allotments of $250 weekly. However you do, just make sure that it adds up to $1,000. And then the second requirement we have is just make sure you use 10 debit. You swipe your card at least 10 times in the next 2 months. I know I can do it in a week because I like swipe. I never have cash. But, just make sure that you swipe your card at least 10 times. So that's all I have. I will hand it over to Stephen. If you guys have any questions, I'll be here towards the end and I can go in more detail with the benefits and things like that. All right, Stephen, all yours.
All right. Again, thank you everybody for taking time out of your day to join us. Again, my name is Stephen Rosner. I'm a mortgage loan officer with PNC Bank. Never really been one to drink the Kool-Aid, but I must say, I think PNC is a great company. I think we do an excellent job serving our clients and the community as well. You get all the benefits of a big bank, but you can get things accomplished and decisions made at a local level. I'm very confident that if any one of you were to walk into any PNC branch, and there are plenty of them in the DC area, that you will get great customer service and be treated very well. Now, do we want to show the video or should we just go? We don't need to. It's okay. If it's all right with you guys, I prefer to kind of conduct more of a discussion than a lecture. I really think that you'll get a little bit more from it. I'm not sure if the people online are able to ask any questions. If not, it's too bad.
I think they're
I don't know what to say, but.
I think they're going to text questions.
They can type up their questions.
Okay.
Yeah.
Sorry, people online. So if we could just maybe start, it's all right, with a show of hands. If you're comfortable sharing this information, do we have any homeowners? Okay, great. Out of the people that did not raise their hand, does everyone want to purchase a home, or is there anybody here that absolutely does not want to own a home? Okay. I'm sorry? So, okay, I said anybody that absolutely does not want to own a home. Okay. So, for the folks that raise their hand that own a home, can you, if you don't mind sharing, just some of the things you like about home ownership? Anybody?
Your tax refund again.
Tax refund.
That's my
Yes. Any interest you pay on a mortgage or a home equity line of credit is a deduction on your taxes. Okay? Big advantage to owning. Anything else besides taxes? Equity. Exactly. Okay? You pay down your mortgage, and if you need to, you can borrow against that equity, or if you decide to sell at some point, you get to keep the money, right?
Mm-hmm.
Okay? Hopefully. Assuming you're not in any trouble with the IRS, right? Anything else anybody could think of, benefits to owning?
Stable housing.
Stable housing, okay?
Leverage.
Leverage, okay?
The mortgage payment seems to be less than rent nowadays, so.
Of course, you could either pay your mortgage or you could pay someone else's, right? Now, I think we've all rented at some point, right? Typically, what happens to your rent every year?
Increase.
Right?
Yeah.
So, about an average, and I've heard some horror stories, but let's just say average of 3%. rents go up every year, okay? With a mortgage, you have the option of having a fixed payment, okay? So if you were to look at $1,000 mortgage payment today versus $1,000 rent, okay? 30 years from now, your mortgage payment is still going to be $1,000, okay? We can do the math on it, but your rent is going to be a lot higher, okay? Rough calculation, 30 years, you're probably looking at least $3,000 if it were to increase by 3%, okay? So that's a major benefit, okay? Now, any downsides? Because, there certainly are challenges,
We
right?
don't have that kind of time.
Repairs.
Repairs, yep. Something goes wrong, you can't just call the management company. You gotta pay for it, right? Anything else you could think of?
Property taxes.
I was just gonna say that as well.
Property taxes do go up, especially in DC. Anything else?
You can't avoid crazy neighbors.
Can't just move. Right, can't just move.
Yeah, you are locked into that property, right? Anything else? What happened to the housing market? 2007, 2008, 2009, right? We saw some fluctuations. So it's important that you make an informed decision when purchasing a home or refinancing.
Sorry, lots of information.
So, briefly gone over some of the advantages, disadvantages of home ownership, okay? Would you say that the advantages outweigh the disadvantages?
Yes.
We got a yes.
It depends on your family.
It depends on,
Your family.
okay. If you don't mind, tell me a little bit more about that.
Well, I just feel like, if you're not in a stable job or something like that, and you have small children, it really depends on your ability to be able to move to a place where the rent is less if you're renting. In a home, you're not able to do that. You could potentially lose your home if you don't have a stable backing. So it depends on your family.
Excellent point. And, I think it is important that your kind of situation is stable, I guess, when going into a large financial transaction like that. Great point. So we have the advantages and disadvantages. Now, let's just talk about the loan process. Okay? For the folks that have been through it before, was it a pleasant experience?
No.
No, right?
No.
Not at all. Right? So a lot of papers to sign, right? You don't even know what you're signing yet at the end of it, right? It's like, okay. Anybody, any difficulties getting it through underwriting, right? Okay. So if we take a look at where the housing market was back in the early 2000s, right? It was very easy to get a loan, okay? They held out a mirror. If you could fog it, you're good to go, right? I remember when I bought my first property in 2007, no documents, stated income. They asked me how much I made. I told them that here you go, right? So unfortunately, the pendulum has kind of swung the opposite direction, where now we require a lot of paperwork. So it can be challenging, and again, that's why it's important to kind of go into it prepared and with a good loan officer who's going to be able to guide you on what I call the path of least resistance. We want to try to get you in and out of underwriting as smoothly as possible. Again, I think rates are still at historic lows, although they have gone up a little bit, okay? It is still a very low interest rate environment. I think a great time to buy if you are in a high interest rate, or if you need cash for whatever reason, or if you're thinking about an investment property, a second home. I think it is a great time to at least review the numbers and see what works for you. So far, I guess, any kind of questions? Or are you guys just kind of here for the free lunch and the wellness credits? It's okay.
I do have a question though.
Sure.
Hearing the changes with the current administration and the deregulation that's being talked about, is that affecting the mortgage business? Like, not affecting actually, because like you said, it was almost too easy to get a mortgage, and that was
Yes.
the biggest problem. That was like part of the source of the problem.
Definitely.
And now, and then we went to the other extreme. So where are we now?
I
Given this recent
still think we're on the side of
caution.
and lots of paperwork and steps that you didn't have to go through 10 years ago. However, it does seem like we're headed a little bit more towards, as you mentioned, deregulation, which,
Can be.
regardless of how you feel about the administration, I think will ultimately make it a little bit easier to maybe get through the mortgage process.
Only for the informed consumer. For the well-informed consumer.
I mean, I think things are always going to be better for a well-informed consumer, correct?
Sure.
But I think, regardless, I think it's very important, and I think it goes back to what this young lady mentioned of being prepared, looking at, the costs, the stability of your situation, and, just making sure that you're making an educated decision. Typically, we require all lenders in a conforming or conventional loan a 20% down payment, okay? Which, in this area, what would you say the average price of a home is?
7. Where are you? On the hill, or where are you?
You let me know.
Yeah, right.
Where are you?
That's right. That's right. Where?
Well, in this area, it would be like 800,000, right?
Okay, so 20%, 160,000. I don't know about you. I don't know too many people walking around with 160 grand that can just write a check, right? So we do have other options. In terms of down payment, we offer a PNC community loan for first-time buyers, where you can have as little down as 3%, okay, and no mortgage insurance. Is anybody familiar with mortgage insurance? Or has anyone been required to pay it? Not a fun payment, okay? You're just more or less throwing your money away, right? So anytime you have less than 20% equity in a property, okay, on a Fannie Mae or Freddie Mac loan, okay, you are required to pay mortgage insurance. With PNC, again, we offer community loan. So depending on the location of the property or household income, okay, we can get you in for as little down as 3% and no mortgage insurance. So again, benefit of kind of handling some of these things with PNC. For our jumbo loans, so that is anything above loan amount above $424,000. I think we are extremely competitive. We have special physician loans. And, I certainly encourage anybody to shop our rates and bring me a loan estimate. and I feel pretty good that I'm going to be able to beat it. So again, goes back to being an educated consumer, see what's out there, and get a loan estimate. Is anybody familiar with a loan estimate? It used to be called a good faith estimate. With some of the kind of new regulations, they changed some of the wording. But a loan estimate, okay, is going to break down everything you need to know. Because as you mentioned, there can be a ton of paperwork, right? And try to read it all, your head starts spinning. Everything, for the most part, that you need to know is right there on the loan estimate. The loan amount, what your payment's going to be, if there are any points, okay, that the lender charges. Can anybody tell me what points are? Because that's a big thing where I see people.
Isn't it a percentage of the loan amount that gets kind of get charged? I noticed that a lot of times the more points or the lesser the rate, sometimes the more points that get charged is like if there's a fraud, so to speak.
You got it. That is perfect answer.
Do I get it?
We get an extra sandwich if you want. So a point is a percent, okay, that lenders charge, and it can lower the rate, okay? So when someone says, oh, I got 3.75%, let's say, and I say, well, let me see the loan estimate, there's that line showing that it included points. So typically, I always try to give quotes at par pricing, okay? It means no points. Another benefit at PNC, and I like this a lot, okay? We have tons of loan options. Fannie, Freddie, PNC Community, FHA, 15-year, 20-year, 30-year, ARMs, adjustable rate mortgages. That's something else we can discuss. But we have everybody's shaking their head. Okay. Well, when I get done with this thought, let's talk about it. Okay. We have all these options. Okay. Our loan officers, we are commission-based. Okay. But regardless of what loan you pick, we get paid the same. Okay. We are not incentivized any way whatsoever to steer you to a specific loan. We pretty much are here to give you the options, and if you need help kind of going through the decision process, that's what we are here for, okay? Most important thing is that you make an informed decision and that you can afford the mortgage payment. Sir?
Do you also recognize the housing loan for Department of Agriculture?
Like certain times of
It's a loan.
agriculture loans?
Yeah, it's a loan.
Yes.
It's just like DHA.
We do
Like
that. I'll be honest with you, just because not too many farms in the immediate
Yeah, but
area.
it's not just farm, but you have to go up from the city. a
Yeah.
certain amount.
We do provide them. I just wouldn't want to give you bad information.
Yeah.
We
I
do
understand
offer it,
that.
yes.
Yeah.
If we could kind of go back to when I brought up adjustable rate mortgages, a few people shook their head. Was that anyone ever in an adjustable rate mortgage? Okay. If you don't mind me asking, I'll start with you, sir. When did you, I guess, begin? When did this loan originate?
First loan, 96, on an ARM, and then it ballooned
Okay.
like after the first year. And so after that, the whole purpose, I guess, is to get on a fixed rate, to keep your interest, to keep your mortgage from going up. But after that first balloon payment, I don't think the ARM is a good idea.
Okay.
Right. It doesn't work for me.
Okay.
I don't like the uncertainty of it, of not knowing when it's going to go up and stuff like that. I don't like that.
Because again, we don't know what's going to happen to interest rates.
Right.
That's the whole reason. There was a plus of getting a house. It's about stability.
Stability. Yeah,
Knowing
exactly.
what you're gonna spend.
So yeah, no, definitely. Ma'am, you had a. experience with adjustable
Oh,
rate
mine was
mortgage?
fine though. I was on an ARM, house, 2017. I bought my house in 2010.
Okay,
I was on an ARM, it was fixed for 4 years and then would go up 1% to the max would have been 5.5. But I refinanced before the 4 years because I knew that, it was coming and I knew
Yeah.
this was my plan was to refinance before the 4 years and actually just wait and see because I thought about doing it the first year, like a full year after, but the interest rates weren't great. And then I saw that they kept going down, so I was like, I'll just wait and see kind of what happens in the next few years. And then we hit that low because of the bubble burst, so I was like, my time to get in. So I actually got in at a fixed at 299.
oh, wow, congratulations.
I know.
Yeah.
I know.
Okay. So,
So, yeah, so it actually did work for me because I knew going in that I wasn't going to wait for the 4 years. I was going to refinance before.
okay,
So, I mean, it works, I think, if you kind of know, but then again, too, it maxed out at 5.5, which really wasn't that bad. So the max wasn't bad either, but I just let me get out before.
so definitely a little bit of a gamble. Sounds like you won.
Yes.
So, now, with our ARMs, we offer 5-year, 7-year, 10-year ARMs, okay, where, as you mentioned, for that period, interest rate and your payment are fixed, okay? And because there's that bit of risk there, that unknown of what's going to happen with interest rates, payments are going to go up, right? Right now, people who have adjustable rates, their next rate adjustment, their mortgage payment's going up, right? So because there is that little risk there, okay, typically your fixed period of the ARM is going to be a little bit lower than it would be on a 30-year fixed mortgage. So maybe for somebody that knows they're only going to be in a property for 7 years, might want to take advantage of a 7-year ARM or do a 10-year ARM, give themselves a little bit of wiggle room, right? So it can make sense. I think it's really all about finding out what's important to our clients and, again, showing them the options. And we're here for any questions, but ultimately, we want you to make, again, an informed decision. Any other, I guess, things you might want me to cover? Again, I want this to be useful for you.
Well, investment property, how do you get to the second house?
Okay, well, there's a second home, which would be like a vacation home. Typically needs to be 100 miles away, okay? And again, that would be considered a second home, okay, not an investment property, okay?
Why does it have to be 100 miles away?
If you want it to be a
Guidelines.
second home.
I guess what they want to avoid is me saying, living, somewhere in Northeast and saying, oh yeah, I have a second home in Northwest and getting a good, kind of a lower interest rate and then renting it out and it being an investment property. Typically when an investment property, we require 25% down and the interest rate is slightly higher because they're riskier for the bank, okay? Because if someone owns a home and they own an investment property, okay, if things go bad, which one are you going to pay first? Exactly, right? You're going to say, forget the investment property, right? So for that extra little bit of risk, typically the interest rate's a little bit higher. But again, there is that distinction between a second home and an investment property. An investment property is to be rented out.
To be living 100 miles away. I'm assuming.
Correct, yeah. Investment property would be next door. It's an investment, right? So we encourage that and we're happy to help.
Hi, Stephen. We're also going to open up the floor to our Unity Healthcare employees that are participating online. So please take a moment to type in your questions. We'll read them as they pop up. But in the meantime, everyone in the room, please continue to ask any questions you may have of Stephen regarding today's webinar.
So second home,
Mhm.
A second home, can a boat be a second home?
You know, that goes to,
If it has the uh, facilities such as your bathroom and your galley, your kitchen, they have all the aspects of a land home.
if I could, I'd like to get back to you on that. Again, the last thing I want to do
Yeah, give it, okay.
is just
that
give
was
you
just a
bad
question.
information.
Yeah, because there's certain things to that criteria for a second home.
Yeah.
Yeah.
I could certainly,
Stephen, I do have a question for you. What are the basic requirements for financial approval for a second home investment property? I think someone just asked you that. Is that correct?
yes. And I guess this goes to really for any mortgage, you need to show, and this, again, this is for any mortgage, you're going to need to show that you have the ability, first and foremost, to repay the loan. Okay? Believe it or not, your income, okay, is actually a little bit more important than your credit score. Okay? Because you could have a perfect credit score, right? If you don't have a job, you're not paying back the loan, right? So, we do need to make sure for any mortgage, okay, that you have the ability to repay the loan and that we document your income. This can be pretty simple for a W-2 employee, right? Couple pay stubs, W-2, verification from your employer, you're good to go. Somebody who is self-employed or maybe has some bonus or overtime income, it can be a little bit more complicated. And I would like to touch on our pre-approval process, but I just don't want to jump off topic too much, but I'm gonna,
So, Stephen, I do have a question that kind of segues into that pre-approval process. One of our questions is how soon before you think you are going to be ready to buy should you go to the bank to see how much mortgage you are pre-approved for?
excellent question. I would recommend everybody do it as soon as you are seriously considering purchasing a home. One distinction I would like to make is most realtors are not going to want to show anyone any properties unless they have what's called a pre-qualification letter. Okay? I can issue someone a pre-qualification letter. I run your credit looks good, you bring in a pay stub or let me know what you make, a tax return, okay? I can issue a pre-qualification letter. What PNC also has, which I would really recommend people take advantage of, is what's called a pre-approval. So it's different than a pre-qualification, okay? A pre-approval is a commitment, okay, from PNC to loan you up to a certain amount of money based on a certain interest rate. It's saying that this person can't afford this payment. Our underwriters look at it. Underwriter is the only person who can approve a loan. A loan officer cannot. I can give you a good idea of what I think an underwriter will say, but if you want to know for sure, I highly encourage everyone to take advantage of our pre-approval process, up to 48 hours, and we'll have it done for you. That answer the question, I think? I hope.
How long is the
Excellent
validity?
question. Pre-approval is good for 60 days. If you go beyond, let's say you're out shopping for a house and you just can't find something that you want to buy, within that 60-day period, we would ask you to bring in some more documentation just to prove that everything's the same, and we would extend it for you.
How about the pre-qualification? How long does that last for?
Pre-qualification is just good.
Okay.
So I have two questions. So what would be the APR for investment property? Starting off APR, what interest rate did you have for that? And another thing for investment property, if you showed that you had a tenant and what they would pay, could you use that as income to show for that property?
The only time you can use income on an investment property, okay, is if you have a signed lease and that security deposit is cleared. okay? So I guess in that case, you would have to be able to show that you can cover that mortgage payment on your own.
You know, signed lease from the occupant you talked about.
Correct. And a cleared security deposit.
Okay,
So
okay.
basically, you will never be able to do that when you first purchase an investment property.
Correct.
Most likely, you wouldn't, but
Yeah.
if you're refinancing, you could.
The one situation which I have seen before is someone, let's say, I guess this isn't, it's a little bit different, but in the event someone has maybe like a 1-2 bedroom condo and they're looking to move to, a single family home, and they plan on keeping that condo as an investment property, you get a tenant in there and that security deposit cleared, the lease in place, and we can count that income. So you don't have to qualify for both payments in order to get the second home. But for the most part, if you live in your current primary residence and you want to get an investment property, at least initially, you're going to need to show that you can cover both payments.
So the thing is that if you see an investment property, you haven't purchased it yet, or whatever, you have the occupants in the investment property already. Now, how would you show if those occupants still have to show that, what you're saying?
So you're saying that you're buying an investment property, it's currently rented out, and people plan on staying there? That's another one. Again, great question, but the last thing I want to do is give you the wrong answer.
Yeah.
You need to write down your email address. You got some questions.
We have
And
enough.
I really do want to get you the information.
Yeah, I know.
Please,
I
write down your information. I promise you I'll get back to you with the answer.
We have a couple other questions online. What is the option and interest rate to refinance?
Anytime someone asks for just an interest rate, it's a tough question because there's so many factors that go into it. Loan amount,
Ratio.
I don't know if this person is upside down on their mortgage. So
the answer is to contact you, basically.
that's a great answer, yes.
Okay.
I'd be happy to go over the specifics of their situation and get them a quote immediately.
Okay. What is the minimum credit score to get a pre-approval?
660.
That's all.
Are the ratios, it used to be back in the day, way before everything got easy. The ratios where I remember being told, the mortgage couldn't be more than 36% of your total income. How is it? Something like that. And
Your debt to income ratio.
your debt to income ratio, is that still kind of like the same?
Yes, it is still important, and that goes back to showing that you have the income, okay?
So what are the numbers?
Typically, for a Fannie Mae, Freddie Mac loan, you need to be at 45%, okay? And that includes the loan you are applying for and your existing long-term debts.
Another question similar to the one of the refinancing. What are the refinancing options? Is there a good interest right now?
Interest rates are extremely low. Whether or not it is good would really depend on where they currently are. So, if they're currently in the 3s, I don't know if there's going to be much I could do for them. So again, it would really depend on their specific situation. But again, if you look at historical rates, we are in a very low interest rate environment. So it's a great time to buy, refinance, and a lot of investment deals are going to look a lot better and are going to work out because of the low interest rates. So again, excellent time to refi and lock in, or especially a lot of the kind of refis that I'm seeing lately are people that are in ARMs, okay? Their rate has been adjusting, but because interest rates have stayed low, they're winning, right? Where now, they're ready to take the money off the table right? Kind of make that gambling analogy, okay? And lock in while rates are still low. So those are great kind of refi candidates. And then also we do cash out refis. So if you have, solid equity in the property and you're looking for some cash to do a home renovation, you can certainly do a cash out refi. One other thing I want to discuss with regards to refis, which is something very unique to PNC, is our home equity installment loan. I should have mentioned this earlier, but home equity installment loan. Essentially, I am able to refinance a mortgage for less than $300 in total cost. No appraisal, that's right, no appraisal, no origination charges, no title fees, no points. Again, home equity installment loan, and I can set the term anywhere between 5 and 30 years. So a lot of times when we're discussing our refinances, a lot of clients will say, look, I'm 12 years into this mortgage. I don't want to go back into a 30-year fix. Okay? You don't have to. Okay? With our home equity installment loan, I can say, great, you're 12 years in. You want to do an 18-year loan? Okay? And we can keep you on that same schedule if your goal is to pay the house off.
An
I'm scared of
18-year
you.
loan?
I'm talking.
I lost you.
I'm sorry?
I lost you. And an 18-year loan, but is it a mortgage or is it just an equity loan with the existing mortgage?
It is a home equity installment loan. So in a way, it's kind of a cross between a mortgage, but it's not a traditional mortgage.
Okay.
It is a home. It is, again, it's a home equity loan, but we're able to do it to mirror a mortgage and save you a ton of money in the process. Makes a lot of sense, I found, for people, maybe with I'd say less than $200,000 left on the mortgage. The numbers work out amazing. So definitely a good thing to consider if you're thinking about refinancing. And we could run your numbers as traditional mortgage or home equity installment loan. Yeah.
Okay, I have two questions.
Sure.
First question is, what is PNC's process for individuals who are interested in purchasing foreclosed homes? And then my second question is, what is PNC's stance for getting people with diverse backgrounds into housing, purchasing homes?
Okay. Let me do the second question. It's a little bit easier. I think if we offer, as part of our kind of community, I guess with regards to low to moderate income, they classify stuff as, we have plenty of options, and regardless of, I guess, I don't know if you said, can you repeat the question? Just want to make sure I get it right.
Okay.
Diverse backgrounds?
Diverse backgrounds, people of color, people of Hispanic descent.
Okay. I didn't know if you meant diverse income ranges.
Nope.
You meant...
I mean people of color, because you mentioned that the mortgage credit score is 660. So you have individuals who may have amazing jobs and don't meet that credit score requirement. So what is PNC's stance for aiding them to be homeowners?
Can I add something to that? I'll let Stephen answer. So I've been with PNC about 8 years, and you actually asked a really good question. In being with PNC, I know that we go out into the community. We do a lot of different things for our communities, whether it's DC. I mean, like today is an example. We're doing a financial literacy seminar. So this is something that we do for our communities, and there's no we're not discriminating on anything based on your diverse background. We go out and we work with her. I actually have a mortgage loan officer that worked with one of our clients for 2 years. This lady had a lot of issues and she really wanted to purchase a home. So we work with everyone depending on, and with the mortgage advisor, he would meet with the lady monthly. He was like, okay, let's look at your credit score. Let's see where you are. Let's look at your income. You need to pay this off. You need to do this. It took her 2 years to buy her first home. but we helped her get there. So it all depends. When you have a good mortgage loan officer and you find a good banker that works with you, they will help you get to your goal. So PNC, we are a big bank. We're the fourth largest bank in the United States. However, when you walk into our branches, when you walk into our, or when you meet our employees, it really will give you that very local bank feel, Main Street feel. So we do a lot for our communities. We do a lot of different things. We also have a community reinvestment,
Community Reinvestment Act.
that we are committed to. So we ensure that every community we have, guidelines. And I'm not a mortgage officer. I'm just saying based on my personal experiences with the bank and what I do for the company. But I mean, Stephen, you probably know a little bit more about what we do through the Community Reinvestment Act.
What I was also going to say, a few things on that. With regards to credit score, we do have certain exceptions in place. So if someone had, a very unfortunate situation, or there are ways to get around it where we can ask for an exception based on a person's credit score. One. Two, with regards to, I guess, how we stand amongst the community, I would challenge anybody to really find anything out there bad about PNC. And I think now, as we kind of mentioned before, there's a lot of paperwork involved, right? A lot that goes into getting one of these deals done, okay? The flip side on that, okay, is there has never, I think, been a time where it doesn't matter who you are, what your age is, gender, race, religion, okay? Our underwriters are looking at numbers. You either make the numbers or you don't, is what it comes down to.
So is it safe to say that, because I know where your question went, and it wasn't 100% answer, but it sounds more like it's on a case-by-case basis. So if you are someone who may have some challenges, whether diverse or not, you can walk into a PNC bank and get the assistance that you need to help you get to owning a home? Is that a fair answer?
Yeah.
Shay, what was the other question?
Regarding foreclosure, so if I was interested in purchasing
A foreclosed home.
Yep.
A foreclosed home, what type of opportunities or resources does PNC offer to assist?
Depends. If it's going to auction, you got to go with the auction's guidelines, whoever's, I guess, the auction house. For something, I guess, foreclosed or a short sale, you can make an offer certainly on a short sale house. I know that process can be difficult. It depends, because at least with the short sale, trying to make this as easy as I can here, but pretty much the bank needs to agree to take a loss to some degree. So sometimes that approval process can take a little longer. With regards to just other foreclosures, I don't know of any specific programs we have, but that's another one that I'm more than happy to kind of do some research on, and give me your email address or preferred method of contact. I'm happy to get the best answer for you.
So with that, I want to close today's presentation. I want to give a hand to our presenters today.